All right, guys, here we go. Real quick video on gold and silver. And, nothing goes up forever. But how this breakout started, we were in a sideways consolidation zone where you see this gray box, technically called an inside bar. We were inside that green bar right here in a small, narrow state location on the chart, and then came down, broke our trend line actually for a couple of days and the 20, and then we got back up and over. These blue arrows were our candles to start slowly scaling in, but as you can see, we're short the market, looking for a little bit more downside. And how we did that, we'll get to it here, is we use the hourly chart, and where you see the gold arrow was our scale in bar there, as you can see at the close of that bar under the 20. Plus we took out several hours previous to that. Okay, and then we never lose more than one candle. In other words, we get in on this candle, whether it's a daily, weekly chart, whatever timeline that you're using to invest or trade on. Normally, if you pick the wrong location, the wrong spot, it'll reverse on you. Go against you. In other words, either the next candle or two. Okay, so you're going to know pretty quickly. And the way to stay in the game the longest is your first loss is always your smallest loss. Keep your losses small, and you can be wrong, just don't stay wrong. Okay, people will stay wrong thinking, well, we're going to come down that low pivot and bounce. In other words, if they went long up here, but we knew better. But anyway, or they'll wait until it hits another moving. Anyway, your mind will play a lot of tricks on you if you don't get out quick. And next thing you know, instead of a few dollars underwater, you're several hundred to several thousand. So anyway, that's our little trick. As soon as I got in, put the stop loss above. And if I'm day trading, I will bring that stop loss to the next candle all the way down. Okay. But this is just for the video. Then we will use our secret recipe to readjust that after the video's off. Okay, and let's go to, that was gold. Let's see if we can pop over to silver. Come on now. And let me show you. Well, we had this, again, sideways consolidation like I talked to you about on the gold chart. Inside bar, that red candle here. Wait for the breakout and over the 20. A lot of variables about that. We have our 50% off course below. You can learn how to do this on your own. But anyway, another inside bar, narrow range consolidation, breakout, so on and so forth. And then let's go to the hourly chart. Man, come on now. And then here we go. Again, same deal. Even on this small candle there, we didn't get in exactly where we wanted to. But let me do this real quick and show you. So as soon as we take out that, well, we like to wait till the close, which it made it. But as soon as it takes out either a previous high pivot or low pivot where price basically does a 180, and you can kind of draw a V there. But perfect close under that low pivot, and then the rest is history. And of course, even on this, as small of a range as it was, we still put our stop loss there. And then we will be looking for the next stop loss zone, depending on if we close and continue on under that area. Okay, let's go back to the daily. And like I said, we have that course below, and it will 50% off right now. You can learn how to do this stuff. But let me show you that. Let me give you kind of a freebie here. Okay, this is a 180. Let me take everything off there so you can concentrate just on this. Okay, this is a 180. Now we got to wait till close to the close. We have about 2 hours to go and see where the previous green candle started out. And look, we're barely under it, but it looks like we're going to close under it. And high odds, high probability. We're talking over 70+% of the time this type of close, when the red, doesn't matter if it's on a 2-minute chart, weekly chart, or in this case, a daily chart, you will get continuation to the downside. I don't think you ever heard about that before, but hey, different things you can learn. All right, so there you go there. Now, what's causing all this? Let's look at the DXY. The people out there calling for the destruction of the dollar. The dollar's going to zero. Dollar's worth. I don't know what they're smoking. Obviously, they can't read a chart. And let me show you. Here we have this level where the green dashed line is. As you can see, they do not, meaning, the guardian angels, the protectors, the Fed, whoever it is that's taking care of the dollar, the DXY, does not want this thing under that green dash line, that 101. That's a measured move. Our, members know how to do that, and it's in the course, but it's extremely helpful. And right here, you had a couple of 3 factors in here that cause this to bounce. Okay, now let's go back to the daily real quick. And as you can see, we came up to the 200, had a 1-day fail, but no follow through. Okay, see, and I just talked to you about this on the silver chart. Okay, where we're expecting, if today that red candle for today on the silver chart closes under yesterday's green candle, we should see follow through. Okay, let's say you went short there. Matter of fact, I would have co-signed with you on that. Okay, so that's why it's important never to lose more than one candle. As soon as we came up here, we would have been out rather than, because who knows how far this thing could run. Okay, the smaller your loss, the better. Okay, better that type of loss here than something way up there in the stratosphere cause you problems. But we have a high pivot here. In other words, where price does a basically up down, and then low pivots down up. Real easy. Very important to know those because they're all over the chart, and they're going to help you with support or cause price to come into resistance. Now we're well extended, very extended above the 20 here, that blue line. Now it is almost straight up, doing a pretty good little move here on the DXY, and but we're coming into resistance. Then we have another measured move here at this gray dash line that our members know out, and it has like a 98% probability of success as far as resistance as you come up to it, or support coming down. Then you're at a whole round even number up here at 105. Okay, so if we get through this, I would say from 104.80 to 105, that's the key area to take off the short positions, start going long gold and silver. Okay, so yeah, personally, the DXY, only thing I mean, you don't have to trust me. Look at the chart. DXY, it's more powerful right now than Bitcoin, quite honestly. The dollar's stronger than Bitcoin as far as moving up here since the 1st of October, even though October is historically the best month for higher prices in Bitcoin. There's been more green Octobers than any other month, second to February, by the way. Little bonus there. And so we'll see. We're still looking for a very positive very positive month for Bitcoin. And if you can see here now, see those pivots I was talking about? See that blue dash line? We were under it. Now we're a little bit over it. We'll see if that holds. We still have just under 5 hours to go before we close Bitcoin. And we'll see what happens today. Still bullish. I mean, we had a run from way down here to the high there. So pretty good run. And if we can just, pull back here, reset the chart, and then move, as soon as we take out that high pivot here, another freebie for you, this leg up, what you do, you start right here and put that same length measured move there, here, okay, and that gives you a target. And it's mid high 70s. I'll just go ahead and save you the trouble of figuring that out. But yeah, guys, thanks so much for watching. Check out our members group, and if you want to learn how to do this stuff, check out our micro futures course below. And we will see you on the charts.